It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, September 29th, 2015. Having an incredible week here so far. Squeezing out the last few drops of this beautiful month of September. You know, we got the 1st of October right around the corner. That means non-farm payrolls later on this week. Big news here to finish up this week. We have a jam-packed newsletter in store for you guys here tonight. You know how we roll here. Crude oil, range-bound and balanced this evening, which means we're focused on range rotation. But we can see a spike in channel on the chart from today's session, which tells us to keep an eye on the buy side for tomorrow for all you oil traders. How about the E-mini S&P? S&P is bearish this evening and trading inside a range. So we will be using range rotation with the focus on selling in tomorrow's session. How about the gold? The yellow metal is bearish with a spike in channel on the chart, which means we're still looking for the sell side, and we're going to be looking for a measured move correction tomorrow to push it back higher for the best selling opportunities on the GC. And then, of course, we can't forget about the euro. The 6E is bullish as it rotates back to test the highs of the range from last week. But hold on real quickly. We have a very big clue. The buyers barely missed the highs earlier today, right about 3 a.m. So we're expecting a little bit of a correction before we get that move back up to those highs for tomorrow. And we get a great target waiting for you euro traders, both up and down tomorrow. As you can see, we get a plan for crude, S&P, gold, euro. Before we go into tonight's newsletter charts, I do want to make sure to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. There'll be a link right below the video in the description of the video that'll take you over here to sidewaysmarkets.com. There are a bunch of reasons why there's a lot of value on our trading blog here this evening. First of all, if you're not a member of School of Trade and you'd like to get a free pass, come out and test drive our live trade room. Grab your free pass in the upper left-hand corner. Then, of course, we have a nightly newsletter mailing list. Now you'll never have to worry about missing another newsletter ever again. All I need is your name and your email address in the lower left-hand corner. And then make sure you check your inbox. I'm going to send you a verification email. And then I'll send you an email every evening when this newsletter goes live. Right below the video tonight, you can download all the charts that you see me using in tonight's video. Right? Download those charts right below tonight's video on our blog. And then over on the right-hand side, you can join our free trial. It is not the same as your free pass. Our free trial membership, you'll learn all about the many different patterns we use here at School of Trade. You can learn what it means to be a member, read member reviews, and don't forget, we always have someone standing by 24/7, 365 to answer all of your questions. And remember, guys, when you contact the office for more information, there's no question too big or too small, and we love the opportunity to be able to help you guys get your new career as a professional trader off on the right track, right? A lot of different options out there to become a new trader these days, and so we appreciate you choosing us. Now that you guys know the spiel here, now you know the deal here this morning, let's get this party underway here. Starting out this evening's newsletter with our euro, the Euro FX, the 6E. Euro is bullish as it rotates back to the highs of the range, but we can see that the buyers barely missed the highs early this morning, which means we need to stay patient for short-term corrections before we see that next push higher. Once we get up to the highs of the range, we'll then look for selling opportunities because, after all, there is a bearish long-term bias to this trading range. So we're looking for selling opportunities up at the highs, and we're going to use buyer failures up at those highs. If the buyers happen to fail, and again, I think what the biggest clue right now in this euro is, if the buyers happen to fail because they barely missed that high, it was, 3 a.m. this morning was when we saw this. Now, of course, don't forget, we had this pegged as a measured move, so we knew, and this is, of course, what reminded us today to buy that pullback, right? So we knew to buy the pullback today. Now we're just waiting here to see, are they going to just run right to that high, and then we can look for the sell off the high? Or what I think is likely to happen is I think the sellers in the market are going to see this as weakness, so we're going to wait for a correction here and then look for the buy after that correction. So we're definitely still bullish right now, in my opinion. We haven't finished the job all the way up to the high. And like I talked about last night, we had an undershoot of that range low. That gives me a little bit of a bigger expectation up to those highs, and then you throw this on a measured move, and it really gives you those warm fuzzies up there now, right? You can easily see that measured move up around that 1333, right? Depends on what your lucky number is, I guess you would say on that one. So as you guys know, we saw a measured move go higher here this earlier this week. That caused the buyers to barely miss. That's likely going to give the sellers a little more reason, right, to put their weight into this one going back down. Measured move correction, back down to that low, gave you guys a buy zone in last night's newsletter, and this was an easy buy on the euro going higher, right smack in the middle of the U.S. morning session. So a beautiful opportunity there. Now we have another measured move going higher here. And that's just playing right, in my opinion at least, it's playing right into that bear miss from those buyers all the way up at the highs. So I would definitely expect to see a bit of a correction here before we get that next leg up. And really, in my opinion, you draw the measured move off this high here, and you really can have that correction come back as far as this 1200 area, 1191, right, before we really start seeing these buyers come in. So again, I am expecting a correction. How far that correction will go, I couldn't tell you. If I had that information, I'd be hanging out with Branson and Oprah on some private island somewhere right now. But unfortunately, like you and I, like everybody else on the planet, I have to wait for more information, just like you guys. So I'll be waiting for more information here. Seller failure to buy it right back up. If we do happen to fail, sometimes these buyer failures up at these highs, sometimes those buyer failures, I look at those as being one of two things. Either it's unfinished business, in other words, they're going to finish the job, or it may just be a sign of these buyers just failing, and it may give enough to the sell side to try to get this to rotate all the way back down. So look for failure targets back to 1164, and then of course the absolute range rotation failure back down to the 1130. Again, you got to stay on the bull side right now if you're a euro trader here. Wait for the correction, and then of course we're going to use that measured move target all the way back up around that 1130, and then we're looking for buyer failure up at that high to sell it back down, because remember, long term, there's a bearish bias going into this range. So once we get back to these highs, that's when the sellers are going to show up, and we're going to be looking for those buyer failures up at those highs. Don't forget, guys, we trade that market every morning live in real time in our trade room. Come out and see us. Moving now from that euro to the yellow metal they call gold futures. Gold is bearish with a spike in channel moving lower, which means we got to stay patient to wait for the measured move correction higher up into resistance levels overhead for the best selling opportunities. And we will use support levels below, right, for our targets. Now, this is a little bit different look than we saw yesterday. If you recall yesterday, I had the measured move pegged with this tiny little guy, right? And then, of course, we were waiting for the correction back down, so I thought that was all we were going to get out of it. But we failed the measured move. And what really makes a lot of sense here is that we didn't get the correction back at least to the 50 of the range. So once I saw that, I said, all right, this is looking too perfect. It's just a little bit bigger spike in channel down now, right? It's the same technique. And for all you kids at home that aren't familiar with the term spike in channel, a spike in channel is a strength pattern. It starts out with a strong move lower, and spike and channels are really important pieces of the puzzle here at School of Trade because they help to fill in the gaps between what is kind of typical price action and what might be price action that comes after news or price action that comes after some big momentous occasion in the market, right? In other words, when you see these big spikes, right? Those big spikes, they oftentimes confuse us. And these spiking channels, at least in my opinion, they do a really good job at kind of filling in the blanks, right? They kind of fill in the open spaces. So the reality is we are definitely want to be looking for a measured correction back up to an area of resistance. And the area of resistance is usually somewhere at the beginning of that channel. That's usually where it ends up going. It's usually somewhere at the beginning phases of that channel. And then, of course, the move back down. the key here is this is the A, B, C, D correction back in, right? And then, of course, your major target ends up being A, B, C, and then D. I'll teach you guys everything I know about these spiking channels. Again, we do use them quite often in our trade room. We saw one today on crude oil, so stay tuned for that. But this is a bearish spiking channel. It's a little bit more pronounced than I thought we were going to get this week. I thought we had already seen it if you watched last night's newsletter. I thought we already saw it, excuse the ingrace, earlier there. Let me correct myself before I sound like a fool. But we know that gold is bearish. It's a strength pattern. We look in the left-hand side, we can see a lot of volume piled up down towards the lower end of this trading range this week. So there's no doubt about it, we're bearish. The hard part about this stuff, though, is that you have to think of a bear spiking channel as all the sellers sitting around a poker table and they have all their chips in the middle. When I look at a spiking channel, I think of a poker game and I think of all the chips have been pushed in the middle. They're all in. And the only way to get another round of selling is to get a correction, right? Attract more sellers. And how are you going to get those sellers back in? They're going to have to take their profit down here, right? You get a gap down here, which is definitely the sign of profit taking. So now we're looking at potentially here a measured move correction up into this area overhead. You'll notice where it is. It's right about where the channel portion, right, of that spiking channel begins. Again, that's your typical environment for a correction. Now, we do have that gap. So gaps love to be filled. But one of the rookie mistakes that I made as a new trader is not remembering one simple fact. Gaps like to get filled, but we don't know when they're likely to get filled, right? That's the question. I can't just blindly sell, try to fill that gap, right? So gaps are really tough to trade because we know they're a magnet, but we just don't know when that magnet will be hit, right? So again, all I know is this right now. I don't know when the gap will be filled, but I do know that the best selling opportunities on gold are going to come after a measured correction, right? A two-legged correction back up. I would love to combine that, right, with an overhead resistance area around this 38, 37, 36 area. And then what do we do when we get back up there? If we do get that correction back higher, you're not going to find it easy to find like a sell trade, right? Some sort of bearish pattern. What you really want to do is, because when we start going higher, what's going to happen is the buyers are going to start drinking their own Kool-Aid, right? They're going to start believing this is a bullish trend. You want to wait for those buyers to try a few times and fail, right? We have a very specific plan for buyer failure. I'll teach it to you in our intermediate class. And of course, we'll wait for the buyers to fail and we'll wait for the buyer failure to sell it back down, right? That's the key in a spiking channel. Because again, you're going to have a hard time finding a selling pattern, right? I'm talking about a buyer failure pattern once we get higher. So here's the reality. We've got measured moves going lower, right? Measured moves going lower. We get a gap lower. We may see this price make that move lower and then give us the correction, the measured correction for that nice sell back down. You can try to buy this low, but you're trading against a trend. So be careful. Treat it as a scalp until proven otherwise. Quick target, quick stop, remove the risk, and try to hold it as best you can. I'm a trend follower. I always like to follow the trend because that's the only place you're going to find reliable trading opportunities. And if you're anything like me, you've probably been burned a few times by trying to go against the trend because you overthunk it. So again, I do expect that gap to get filled. Will it get filled now and then we get the correction? Or will it get filled? Obviously, I'd rather see it go higher here. So we could then look for buyer failure and then fill that gap right down towards the lows. And then once we do have that correction, that will give us the larger measured move. We really don't know what that larger measured move is going to be yet until we see the correction. Okay, we haven't got it yet. We're almost there. Stay tuned for more on gold this week. Stay to the short side. Stay to the short side. There's no doubt about it. Now, shall we keep going? We're going from the yellow metal to the S&P 500, the ES, still on that 12-15 contract here. Now, if you recall from last night's newsletter, we have our bearish channel down, but really what this is this is another spiking channel. See that big spike down? This is not typical S&P, by the way, if you're wondering what's going on with it. It's a very volatile market right now as traders are reacting to really what's happening is you're getting all those pension fund managers, all those big asset managers right now that rely on the S&P for hedging. That's what they rely on the S&P for. You're not going to see big asset managers, right? These are billion-dollar fund managers here. They're not going to use the futures markets for long-term investing because they roll over every quarter, right? Too many transaction fees. It's just not it's not the easiest way, right? It'll eat up into their profits by having to pay commissions for all getting in and getting out too much during the year. They will hedge all of their equity positions, right, in the S&P. And then, of course, you've got all of your speculators like you and I. So we know this market is dramatically reacting to Miss Yellen's commentary last week, right, where they're still basically telling us that we're going to get this interest rate hike, but now they're saying later on this year. Remember, guys, I truly believe we're not going to see it this year. I think we're going to see it next year. And I've been saying it since March. Until we get this thing worked out in Europe, well, they just started getting some progress in Europe. Until they figure out how to get this economy back on track in Asia, I don't see them messing with a good thing right now. Consumer confidence went to another record high today again. So clearly the consumer's fine right now. It's the traders keep freaking out because the FOMC keeps giving us kind of misleading information about when they're going to raise the rates. So here we go. That's why it's so volatile right now in these Z-minis, right? I highly recommend the S&P right now because the other ones are just whippy. Okay, bearish bias on this because you can see there's your spike in channel. Now, where's the channel begin? The channel begins all the way back up here around that 1910 area, right? So you can see this is no slouch. Now, I definitely will be keeping an eye on this 1900. If I had to guess right now, I would guess, just because that's a little consolidation area, it's a big round number, and I can definitely see this thing, measured correction back higher before we get that sell back down. Nothing's different from last night's newsletter. This is all the same stuff from last night. What is a little bit different, though, from last night is that all we got was that sell off the high. Remember that from last night? If you go back and watch last night's newsletter, or just wait until the end of this video and it will loop into last night, right? There was your measured move correction, right? There was your measured correction. So you measure it up, goes right to resistance, sell that sucker, right? And that's exactly where the trade was today. Very, very easy. You're not going to buy that low because we're in a bearish trend right now. So you're going to wait for that now to correct back up, right? And then look for the next sell, right? Verbatim to what I said last night. You're in a strong bearish trend, look for measured corrections up off those lows. It's very simple. If you don't know how to do it, that's why I'm here to teach you. Right? It's that easy, right? If you don't know what you're doing, then get educated, right? Get educated. And I'll gladly teach you guys here at School of Trade. So we know we're bearish, and now trading inside this range, and there is definitely a bearish bias, right? So the bears are in charge. We then go sideways. The funny part about this chart is that this range was actually projected from the original little tiny thing we saw earlier this week. That's all that is. That's all that is. It's amazing how that works, isn't it? Yeah, right? Very simple techniques. You got to keep it simple when it comes to being a successful trader because you got to leverage that self-fulfilling prophecy. If you're going to use technical analysis, you've got to leverage the self-fulfilling prophecy. Use common chart types, common chart time frames, common moving out, right? Use what everyone else uses. Use the same techniques. Right? And then you just got to be smarter than them to know where, again, what the trend is and to follow that trend. Don't buy the highs, buy the lows, right? The only time you get in trouble as a new trader is when you try to buy the highs and sell the lows, right? So just step back for a second and think about where you are in the chart. Anyways, back to the plan here. We'll save the lessons for our classroom time. Our focus is to keep looking for selling opportunities this evening. Right, as well as this week, which means we'll be looking for buyer failures every time this price tries to move higher. We're going to have to use that range rotation to help understand where price will be headed next, right? So range rotation, we rotated from the low, measured correction, back to the high, sell the high. Measured correction, back to the low. Again, I can't say to buy the low because you're bearish right now, but I'm not going to say you couldn't have bought the low. You could have bought the low. And then, of course, now we're looking for measured correction, back to the high, so we can sell that high. Now, we do know though, right? Here's that, what I'll kind of call the big boy correction here up at that 1900. That's where those sellers are going to be licking their chops. That's where you definitely want to be looking for that nice, big, strong correction back down. That's where the big money sellers are going to be getting back in, right? They're going to want to see something a little bit juicier, right, than this 1880 area. They're going to want to see that return back to 1900. And then again, don't forget, this is a spike in channel, which means it's going to feel like this bullishness is here to stay. That's what makes spike in channels so challenging, is that by the time we get up here, most traders have conveniently forgotten about the spike in channel. So just be aware, once you get up top here, we're not going to be looking for selling patterns. It's buyer failure, because you're going to get a lot of buyers chasing this move. You will. They haven't quite taken the bait yet, but trust me, once you get back to 1900, all the bullishness on stock twits, everybody's going to be talking about, right? You know it's going to happen. And then right where those buyers are getting stopped out, I'm talking to you guys on stock twits. You know I love you guys. I'm playing with you, right? But wait for the buyers to try and fail, and that's when you want to go selling this sucker, right, with buyer failure. I get a lot of questions about how I trade buyer failure. As you know, that's the secret. It's getting in when others are getting forced out, right? That's the way that modern day traders get the edge. We look for places where the rookies, the retail traders, the uneducated traders are caught on the wrong side of the market. So look for the measured correction back to the high. If you get the measured correction back to the high, sell that high. Range rotation down to the low. If the measured correction comes a little bit later, you can expect a bigger correction. Up to 1900 maybe, up to 1907 maybe. We won't know until we get there. And as always, we've got this market in our chat room, in our trade room, all day long here at School of Trade. Last but not least here, shall we finish the job here now? Let's finish this sucker up here on crude. So, crude oil, trading inside a range this evening with a bullish spike and channel. Spike, channel. And up until about 6 p.m., we hadn't broken down that spike in channel right now. So that's a beautiful spot for us here. Now, that spike in channel is a very important clue. That's the first of two very important clues. The second important clue, again, we are inside of a range this evening. That's the second important clue. So range, look at the volume here. Look at that volume. Does that volume look like this volume? Right? Look at that volume. Here's gold. Right? Look at the range of the week. Where would you say, based on the proportion of the range, where that volume is? It's in the lower half, the lower third. Right? So you can tell we're bearish. Now, ready? 1, 2, 3. Now look at this volume. The million-dollar question. What direction are we right now? Exactly. The volume is screaming at us right now. Can you tell what direction is biased? It's difficult. Now, if I had to guess, I would say we're poised to the bull side right now just because of recency, right? Whatever is happening most recently takes center stage. It always does. It always will. Okay, so that brings in this bullish spike in channel. So what that tells me is it tells me to look for, there's your correction, measured move correction, and for buying opportunities off that low. I do expect, though, that range rotation if these buyers aren't going to be here strong enough. Now, we don't have much room here. You'll notice the correction is going to be at 44.74. I wonder what that is right now. Let's take a look. Measure that one down. This is kind of a real small correction here. But yeah, see, it puts you right about that 74 here. So that's where you definitely want to be looking for the buyers to come back in. What you want to look for here is you want to look for these buyers to hold this area here. And remember, it's a spike in channel. So we were talking about this earlier, right? If you had a bearish spike in channel, like we saw on the gold or the S&P, you're looking for buyer failure to sell. We're looking for seller failure to buy, right? So we have a bullish spiking channel. That's clue number one. That tells me to expect a deep correction. How deep you go? How deep you ask? 44.74, right? That would be about where you expect to see the correction. How am I going to trade it? I'm not going to trade it with a buying pattern. Well, you can, but that will be, you're getting in after the fact after that. I'm going to trade it as a seller failure, right? Look at those sellers trying twice, try to get it to go lower, and right when they fail, right, you're buying into their stop losses. The fastest profit you'll ever make is when you're getting in long when the sellers are being forced to buy their way out of their trades. It throws that price because they get stopped, right? They get stopped out, market orders. Okay, so look for a seller failure as we get down to that 44.74. Okay, now if we don't get it there, we're going to look for a rotation back down to these lows, and then another seller failure to buy that low. So really right now, there's not a lot of opportunity to sell until we see price get back up and then correct back off that high again. That's the only real opportunity right now to be a seller. You can sell right here, but there's barely any room left, right? And again, I can't really tell by looking at this what direction the bias is. I've got to go with recency, and I've got to go with today's bullish spiking channel. All right? So really two scenarios right now. They both are buying right now. I've got a seller failure, number one, for the spiking channel correction above 74. If we do just collapse all the way back down, that will be nothing more than what we talked about last night. Range rotation, range rotation, range rotation, right? Back and forth. We'll be looking for buying opportunities there too. So seller failure is the name of the game right now for crude. Either you're at 44.74 or you're down around these lows. That's really where you're going to get the most bang for the buck here. If it goes without us here right now, you know where your targets are going to be. Now your target's going to be A, B, C, D. It's difficult to tell where it's going to be right now because it's probably going to go a little bit lower here before we see each other tomorrow morning. Right? But if it just got right there, then you've got a nice juicy target waiting for you up around that 46.21, right? Then all you got to do is just find those pullbacks, right, on the way up. Just don't buy into that 45.39. Capiche? All right. You guys got a good plan for today. This is a very mild-mannered crude so far this week. Oh, and one more thing, too. I got a few seconds here. Tomorrow's inventory day. I have a plan for trading Wednesday inventory day, and it's a conservative plan, right? Come out and see me tomorrow morning in my trade room. Opens up at 8 a.m., and we'll go over the plan tomorrow morning in our pre-trading routine at 8 a.m. Don't forget, grab your free pass, join the newsletter mailing list. And one last thing before we go here today, kids, take a moment, register for our free trial here at School of Trade. You know, I take a lot of pride in the fact that my free trial, you're going to learn more with me on 1 week for free, $99, than you will anywhere else on the interwebs, right? All those expensive websites out there these days, I'm going to teach you more in 1 week on my free trial. Also, while you're here, check out our 3 levels of membership. We have a place for everyone to start their career. If you're brand new to the trading business, we have the foundation built strong with the beginner's course. We'll teach you all the patterns and the technical analysis in the intermediate. And then in the advanced course, we give you all the strategies, all the trade setups, and of course, access to our full-time tech support teams, chat room full-time trade room. Guys, we've always got someone standing by 24/7, 365 to give you a hand. And you know what I always say, being a successful trader is like being successful in anything. It's like opening up a combination lock. It's not enough to know the numbers, you got to know the combination. That's what we do here at School of Trade. We show you the right way to put all these pieces together in an easy-to-use, simple format that does it the right way. Guys, we've been doing it longer than anybody else on the interwebs. My name is Joseph. Thanks so much for watching. Come back and see me again tomorrow, 8 a.m. tomorrow morning in our trade room, 8 p.m. tomorrow night for our nightly newsletter. Don't forget to share this with a friend. Give me some comments, some likes on the video on YouTube, and I'll see you guys in the mañana. Be well out there. Be nice to each other. Adios, amigos. Bye-bye for now.